Hello, everybody. Welcome to a special edition of the SoFi Weekly. This is our SoFi earnings predictions for earnings that is on October 30th. Okay, so
Maybe a
let's start off with
four.
member growth. Tevis, what is your prediction?
Last quarter, we got 584,000. To some extent, that was an outlier, even though we're going to be trending upwards. And the reason I say that is because SoFi, in these last couple of quarters, I feel like they need to be aiming for profitability. I'm just looking at the member growth number. If I go off of like a 40% year over year, that's about 400K. Like if the declining growth rate continues that trend, because every quarter is like a lower growth rate than the previous. I think around like 45% year over year growth rate is about 450. The other outlier that I was thinking in my head was the Taylor Swift concert plus movie, the Beyonce performance, all the events at SoFi Stadium. My estimate would be somewhere in the range of 485 to 525. I'll say I don't know, I'll say like 495.
I think we're doing 502.
That's like so fucking
Dude,
close.
What do you mean so fucking? No, it's 502. That's why 2000.
Okay.
Because I agree with Tevis around 485 to 525. I think in that range, anyone could pick any number. 584, I think, is not happening, especially because honestly, looking at their iOS app rankings, it hasn't really cracked top 30 ever. I mean, it was at 25 for like a day. And so I think that is a tell of like how many people are actually downloading this bad boy. But people might be signing up online, and the web traffic, Tannor, you mentioned, is not bad. So 502, but I think it could be lower than that in that 485 range.
I have 540,000 is my
Okay.
member, and mainly because of Taylor Swift and the app downloads. We didn't just get to 25 at one point, we got to 18 at one point, which I thought was exciting. That's mainly in the front half. But the only reason why I didn't say it was going to be better than last quarter was because I don't know if you guys remember, there was actually a change in the way that they said they counted accounts. Do you guys remember this from last quarter?
No.
They said that if people ask us specifically, that they will take the member information off the counter, which accounted for like 3% churn annually or something like this. I forget the number. Now they said they're changing it, but they assumed that that was going to account for 10% churn per year. So up from 3 to 10%. So essentially my number was also based on a 10% decrease from last quarter, assuming we get similar numbers around there.
I'm just trying to understand. They're changing the definition of how a member churns.
So
Yeah.
basically, I have the lower bound of all
Yeah.
numbers under 495.
You probably, I would say, have the highest chance of winning.
I think so too. Yeah.
Well, we don't know Steve's number. I'm sure we can find out privately.
I don't know. He said like 415,000 or something last quarter. So I'm sure.
Bro, what if
but
it's like
we can get before
740
that actually
or
goes
some
live
shit?
for sure. Do you want to do product counts?
I can start again with product counts. One thing I want to see is more product growth and member growth, which will signal their flywheel ramp that's effectively working. I think the ratio is about 1.5 products to members. In Q2, they talked about the financial productivity loop, saying that it was like FinServe products to lending products was about 5.3. I would expect that to have increased. In other words, financial services products growing faster than lending products, even though lending products are accelerating in their growth rate, and financial services is not. It's just on aggregate. I think Anthony Noto in Q2 earnings call also said that they had hit an inflection point in that productivity loop. So I would imagine that goes higher. In terms of the actual raw products, like we're definitely crossing 10 million. I think we have about 600,000 products to add to cross 10 million.
Yeah.
And if we're saying something like 500,000 members, then at 600,000 products is basically like a given. I was going around 10.1 million, 10.2, which is around 700 to 800,000 new products. I want to go high 700s, like let's go 775, something to that range. But that's my justification for my thinking.
I agree with everything Tevis said. I'm going to go 778.
Bro, this isn't the Price is Right. What the heck?
You're going first next, Amit. You're going first next.
I
I
want 3K difference.
I want to beat Tevis on the exact numbers. That would be hilarious, bro.
I do homework on this, and you're like, I agree.
That would be the best, bro. If it's like 777, it's like, Tevis, you're off, man.
Yeah, so I looked at the products per member, and I'm assuming that there's going to be a higher ramp up in that. And so I assumed for every one new member that we bring on, we're going to bring on 1.52 products per member. Very specific, but It was just where the trend was going. 821,000 products is what I'm assuming, which is on the higher side again, but it's obviously based on how many members come in. So
But
deposits,
we're definitely
Amit,
crossing 10 million. Like we're that's like definitely happening.
Yeah,
I
it's
think
like
so.
9.1 right now, right? 9.4.
9.4, I think. Yeah.
9.4, yeah.
Amit, deposits. Well, how many new deposits do you think?
Last quarter was 2.2 billion, right? If I'm not wrong.
2.7 billion, I think.
They
It
were aiming
was
for like 2.
10 billion to 12.74 billion.
Okay, so we have to beat 2.75 essentially to show deposit growth quarter over quarter at least.
No, that would be accelerating growth.
Well, year over year, what was it last year? Q3 2022.
I don't think you can measure it like that. Like they just started.
Yeah,
3.7
Q3
billion.
2022 is 3.7. This is a cumulative deposit.
No, yeah, okay. So I was looking for total deposit or actual deposits that year. Okay, so right now we're at 12.7 billion. I will go with another 2.3 billion. 12.7 plus 2.3. What's that?
It's 15.
That's 15. Oh, that is, yeah, I'm so bad at that. That's so easy too. 2.3. 2.3.
All right, so since Amit did that, I'm gonna go with 2.31.
No,
I mean,
dude, come
well-
on. Say, okay, if that's what you
Dude, I don't
no.
fucking know how many deposits we got, but it has to be in the 2 billion range. That's what Noto said in July.
Amit, what's your thinking just before I go into like
My
mine?
thinking is what Noto said at the Barclays conference. He said deposits are on track for what they were last quarter, around the $2 billion range. I'm like, all right, because last time we got tricked, we thought it was 3.2 billion because we read the thing wrong. I don't think it's definitely getting to that 3 billion level. I know deposits are leaving the big banks. I don't know how aggressively they're leaving the big banks.
Oh,
I mean,
sorry.
JP Morgan showed a decrease of like 38 billion, which is, yeah, it's a lot, but it's not like crazy. And SoFi is definitely not getting all of that, especially if a lot of that's going into money market funds and things of that
Right.
nature.
Yeah.
So I think 2.3 billion. I know the 0.3 is random, but that 2 billion is kind of where I'm at.
At a high level, agree with that like logic. My main concern around that is around them having to sell loans in the next several quarters. I know Chris Hager did an article around that. I'm not sure. I didn't do a deposit estimation, so maybe Tannor, you can go.
15.592 billion.
So you're thinking it's 2.7 again?
Whatever it is. I went off
2.8.
deposits.
You think it's 2.8?
I went off deposits per average money account, and knowing that they've slowly increased average deposits per user, I think that'll hit 5,500 per user, and then just associated that with how many members we have.
That was a very sophisticated form of analysis.
It's done this so far. I think like this is not. It looks linear just based on that thing, even though it's not linear at all. It's got its own equation, but it looks freaking right in line.
I would take something in between. Like, I don't think it's like as bearish as 2.3, and probably something in between. I don't know if it's going to be like over 3 billion.
Guys, I think it's on the higher end.
Why? What's your logic?
Well, high APYs. It's getting so close to
But
like
everyone's offering a high APY, so why?
We just raised it again, didn't they, to 4.6?
Yeah,
but that's gonna be
if
for Q4.
If SoFi was the only player, it'd be 100 billion. But this is knowing that they're not the only player in town. There are a large amount of SoFi people that are coming onto the platform. SoFi is seeing growth from SoFi Stadium. There will be, Swifties that are going like, oh my God, 4.5, 4.6% APYs now. I'm a big believer.
Dude, I can't imagine a Swiftie who's like obsessed with Taylor Swift. Like SoFi offers a 4.5, like,
How much were those tickets, Amit?
They were like 3,000 each or something. It was some ridiculous.
Yeah,
number.
if you wanted some nosebleeds, some of the one at the bottom were like 5 digits. These girls can afford some AP. Like these are affluent customers.
I guarantee you, some chick paying $5,000 for a ticket at a single concert is not like APY chasing. Chasing APY is on one side of the spectrum, and then paying $5,000 for a concert ticket is the other side of the spectrum.
You're assuming it's a normal person that's paying for it. It's like if you went to a Floyd Mayweather fight. Can you imagine the people that spend $200,000 for a ringside ticket? It's like, yeah, those people can freaking afford it.
No, but those people would not put their money in SoFi. They have American Express Gold. It's like I always think we are overestimating a little bit the Taylor Swift correlation with SoFi because it's young girls, right? Maybe their parents.
I think people are underestimating how affluent there's a reason why the 2 million FDI, like we went up to 2 million FDIC, and that's still not covering everyone, is that people are putting millions of dollars into their SoFi account. The ones that can afford it. This is not the everyday user, but there are affluent people who are saving at SoFi because not only Are you getting 4.6%? You can get better, but it's also the flexibility that you can take it out any day, use it immediately, invest it immediately, that you don't have with treasuries. And so to take that little bit off the top and have the flexibility of a bank, I think even very affluent people will use.
I think you're a little optimistic for that deposit number. I don't
Potentially, yeah,
know.
I could be. I just want to do one more with you guys.
Okay, go ahead, because we also have personal loan and student loan origination. Go ahead.
Yeah, I want to know student loan originations. Last quarter, we brought on 395 million. I'm curious to know what your thoughts are on origination volume for student loans, which is not our most exciting category in debate right now. So this has been the last 2 years, 900, almost a billion, 1.5 billion, 1 billion, 400 million, all the way down. Last quarter, I thought there was going to be an uptick from 500. So I said 600 million. It actually went down. What are
Yeah,
your thoughts?
I think on this one, like, I don't expect the ramp to be really aggressive from the jump, especially because like the loans only started in October, right? The interest started accruing in September, I think, and the loan repayment started in October. And it honestly, man, it's just like 1 year grace period on repayment where they basically don't get charged, like they don't have any of the repercussions. I think that's going to really hurt a lot of SoFi's ability to have high student loan originations.
Sure.
I just generally don't think people are going to be like breaking down the doors to rush the refi. I think we're going to see a heavier ramp in Q4. I'd love to see that, number being double, like probably like 750, 800, and then in Q4 to cross the 1 billion mark. Yeah, exactly. It could even be like 550, it could be totally underwhelming.
Yeah. Yeah.
So
This is for student loans. We're talking about
Just
specifically,
student
right?
loans.
Tevis, what was your number? 400 million.
no, I was saying something around 750, but I think it could even be
I
lower.
will go 774 on student loans.
Okay.
Okay, straight up, we're all in the same ballpark. In my prediction video, did 800, but I honestly think Tevis is probably closer to the answer. I think 800's on the high side of 7 to 800 would be my range, but I'll stick with 800 for the number.
I thought Chris Hager said 1.6 billion in that article in July, but I think that was his most bullish case for student loans.
Yeah, I think that's what we will want to do quarterly, probably in 2024 or something along those lines, like more on a normalized basis. It'll probably be something along those lines. But really, we only had September to October being the first month where people started getting things in the mail.
Yeah, like if you think about it, like, just take the 400 million origination and okay, that's 1 quarter. You divide that by 3, like let's say 150 per month. And then October is really the only, month that student loans came back. So even if you double that, what is it? That's like 600,000, right?
Can I counter that though?
Yeah.
If we look back at Q3, I'm also just looking at this too. Q3 of 2021, student loans were not back. We almost hit a billion, 1.5 billion. Student loans were not back.
Yeah, but that was like the pump fake that Biden did around like.
Yeah, so this is like better than a pump fake. This is actually happening, but it's like.
But the economy is in a way different spot.
Sure.
That's the only difference. Because like you were in a 0 rate environment, I would be rushing to refi in that rate environment. Whereas here, it's just like, we might be at the peak of rates.
Yeah. Yeah. One thing that I would say that separates SoFi from the group is student loans. There's a catalyst coming a little bit earlier than a lot of these other ones because obviously it's a ton of originations that we haven't seen in previous quarters. That'll, like they said, slight uptick in Q3, big ramp in Q4. Tech platform, that was one we were supposed to do. I did 2.5 million for Galileo, new accounts to a new record high, 131 million, almost 32.
I think we're pretty aligned on the tech platform. Like we're going to see that acceleration in the accounts. Really want to see if they name drop or if they talk about their pilot programs in the tech platform in general. That's going to be really interesting to see.
I wish they would show us some numbers on Technisys. Like I feel like I was just listening to the earnings call for LendingClub, and it's like, as a bank, they are so much more transparent than SoFi is. Like it's weird. Like we get to see all the product numbers and stuff like this, like more retail numbers, but we don't actually get to see like the actual efficiencies of the business.
Yeah, I wonder if you guys have any thoughts on the home loan segment, if they're gonna talk more about Wyndham. I know they talked a little bit about Wyndham in Q2, saying that they're already seeing positive results from Wyndham, like 1 month in, basically. I wonder if we're going to see a follow-up to that.
I said 300 million in originations for that.
What did we do last quarter on that?
So it's funny. And And I don't know if we're doing predictions on this, but let me see here. Home lending. Last quarter we did 243 million, and the quarter before that we did less than 90. So quite the ramp. And all this while like banks are reporting less and less and less originations in home loans every quarter. But we're going kind of from like zero to actually something. you know.
It's still going to be negligible in my mind in the grand scheme of things. Did you have a number for revenue or EBITDA, Tanner?
Yeah. I not for EBITDA.
I said about 561 for revenue, 561 million, and then about 80.
1.
Is that bullish or not?
That's bullish. I did 535.
Yeah. Okay.
I saw a big ramp up in financial services, a small little ramp in technology platform, and a small ramp in lending as well.
Did you have an EBITDA number? I said about 80 million in EBITDA.
No, I didn't.
So, like, my thinking was that for EBITDA, like, sales and marketing spend for SoFi for Q2 was 37% of revenue. It was their largest expense.
Say that again.
Sales and marketing expense.
Yeah, I think this is what we got to talk about, sales and marketing, because essentially last quarter we spent 7 million more than the previous quarter. So we went from 175 to 182, which means the customer acquisition cost was 310, I believe, per customer. And that resulted in obviously a ridiculous amount of new customers, 584, but it led us to be worse on GAAP profitability. So I guess the question to start it off is, do we think we're going to increase that CAC spend and leave profitability for the next quarter?
So okay, so here's the thing though, like here's both sides of it. I don't think they necessarily need to cut spend heavily as early as this quarter, because you can still see a payback from a positive financial contribution from a member that they gain in Q3 in Q4, like a 1 month turnaround for a payback, depending on what segments that customer enters in. So like they could still be cranking up spend in Q3 to maximize their member growth and then just turn it all off for Q4 to get that profitability going.
I assumed a very similar amount of sales and marketing, just because I don't think things had changed too much. But that means customer acquisition cost is going to go up, I believe, around $320 per person, just because if we're bringing on less members and spending a similar amount, that's going to increase CAC cost.
I think we're definitely not being profitable this quarter.
I mean, we could. It's funny how close we probably could. It's getting down there, I think. But no, I don't think we will either.
Mm-hmm.
Yeah, I mean, I think in this environment, it's tough. They guided for Q4. I think we believe them on Q4. I think they had to ramp up that marketing to keep up the growth in Q3. I don't know what they're going to do in Q4 to get it to normalize. Maybe higher student loan originations will help in Q4 as well. But yeah, I think this quarter is going to be tough.
Yeah, I think like -3 cents or -2 cents is like the range that I would be looking at. I think that what last quarter was at -5, I think.
Something like that. I didn't divide it out by the amount of shares. Let's say their CAC costs keep falling. Like, because they said this was the first quarter that they actually saw the financial productivity service loop. If that had continued to fall and they're just seeing like just better activity from referrals or from organic means like SoFi Stadium, and then they also saw good growth, that can mean that they could actually just have cuts in sales and marketing. If they cut like $20 million and they still see very similar numbers as what they're expecting, that's profitability in my eyes. Like, they're very close to my expectations. I don't know. You could have said that about any quarter, and they didn't. So it's just a matter of how efficient they've been at acquiring a customer for less.
The other thing is like the revenue is still going up, right? Like, so my revenue prediction was 561. I just divided it really quick. And last quarter at 182 million, S&M spend was 37% of revenue. If you just divide it out by 561, it's about 32%. So it's not necessarily that they're like lowering their spend on an absolute basis, like their revenue could also just be going up and it can do the spread. If they do both of
Sure.
those things, like if they actually lower the actual amount of spend and raise the revenue, then yeah, obviously they're super close. Probably financial services is going to be profitable this quarter.
That's one thing that we've just quite never seen from SoFi is like real layoffs or something. Like, there was a small amount, I think, on Galileo's side. I think they laid off 60 people
Yeah.
a little while ago. Whenever the teams were coming together between Technisys and Galileo, and there were kind of like teams that had overlapped and did the same job that they didn't need anymore. But
Mhm.
in terms of like getting rid of people because they didn't need them anymore, like that was, no offense to Amit here. Sorry, I'm going to bring it back up. But for in Robinhood's case, like they had all these efficiency costs that they were, or operational efficiencies from laying people off. But that wasn't because they got more efficient. It was because there was no work because there was no trades coming in. So they were saying that they were laying people off just because the amount of transactions wasn't high enough to dictate this
Yeah,
many employees,
they had to figure out how to manufacture gap
right?
profit somehow, right? Yeah, no, I get you. You're right. You're right.
So if they ramp back up to where they were in 2020, they're going to have to hire all those people back. um, and so I don't know. At least SoFi hasn't been doing that. Even their competitors like LendingClub just said they laid off like something like 17% of their workforce and stuff like this. SoFi hasn't done that. I find we're really in a position of strength. And if they don't need to hit profitability this quarter, it's fine. In fact, I don't even think they will because we just signed that SoFi Center deal. Like they're still focused on sales and marketing expenses. But one thing I'll add for LendingClub, they said they expect this marketplace to continue to be absolute until Q2 of 2024. Have like the first two, or sorry, not until Q2, like through to Q like three, like for the first 2 quarters of 2024, it's going to be real hard.
Yeah, I mean, I don't like, I get it and I understand where they're coming from. But at the same time, like Lending Club has been flashing warning signs all year long, every single earnings report, and it doesn't correlate with SoFi. It just doesn't. Like SoFi, I'm seeing more of a correlation with what the Bank of America's, Wells Fargo's, Citi, groups, JP Morgan's are saying than what Lending Club is saying.
Mm.
And all of those institutions pretty much double beat. They were losing deposits, but that's really like a secular trend that we've been seeing across the board for legacy banks. But again, I'm like more bullish on the macro than I am bearish on it into 2024, just because there's all these other factors, like even the election as a standalone, has the impact to push the Fed to even start cutting sooner, like in the summer or even in the spring, right? And so I don't know what's going on in fintech. Fintech's getting like crushed right now from a stock perspective. At the same time, like I don't really, if Lending Club cries wolf, I'm not really worried because like we have decoupled from this company in terms of how not only how it trades but also how it performs. Lending Club is also the company that's like laying off people, and SoFi is accelerating in terms of their growth. So I'm not too worried personally about what Lending Club says.
They practically named them in their earnings call, by the way, SoFi. They said that for the most part, all these banks that are dumping loans onto the market that are just crushing the marketplace is affecting a bunch of companies where there's kind of like last standards advantage sort of thing where lending can still maybe hold up a similar fair value is high FICO score. And then whenever asked by analysts, they said, okay, well, who is in that playground right now? They were like, some of these newer or these new companies that just received bank licenses, stuff like this, or fintechs that have just received recent funding in the last 2 years. It's like, okay, well, you might as well say SoFi's name. Whenever it comes to high FICO, they were even talking about how it's slimming so much for who's competing for personal loans, unsecured personal loans, to the point where it actually might increase a SoFi survivability just because there's a handful of players left that are doing it at the scale that they're doing it at still. And that's quite cool. Like they were saying, if you look at any of the aggregators like Credit Karma or they said a couple, I forget some of the names, but if you go there and you say, hey, I'm looking for a personal loan, who are the ones that you would suggest? There's like a handful of names now, and SoFi is usually always on that list. I don't think it matters for either one. I think Lending Club definitely survives. Like
Okay.
they continue to make new net incomes every quarter. They're not dying. The problem is that they had a strategy for selling loans onto the market that went to crap because a lot of bank failures and need for extra capital. So these banks have been pouring loans onto the market. But what happens in any marketplace like that? If every real estate conglomerate is trying to pour houses onto the market, housing prices come down because supply is way up and demand stayed flat. Well, that's the same thing for the buying market for these loans. Is actually the demand actually went down because rates might still be increasing. So people are like, I'll just wait till I get a better coupon rate. But yet all the loans are pouring onto the market, so it's bringing down fair value. LendingClub is saying we're suffering because every loan that we're selling, we're not getting nearly as much back as what we used to. And that's the exact business model that SoFi also does. We sell loans onto the market. We still market all of our loans as held for sale, but we're not selling them. Like we used to sell 2.9 billion, 3.7 billion dollars worth of loans. These last 3 quarters, sorry, not 200 million, less than 80 million, $410 million. It's tiny. We pivoted. The LendingClub never pivoted. Problem is whenever you don't sell loans, you only have so much room on the books to keep storing them. And so eventually we're going to have to offload them. From what LendingClub said on their earnings call, I think SoFi's been selling them because it sounds like there's been competition in the markets from banks that have recently gotten licenses. I can't think of another one. What I mean, that's why I think we're getting shorted so hard and why Wall Street is anti SoFi, because they look at LendingClub and they say, this is not a survivable market. They're in the same business model, but the execution has just been weirdly different, like surprisingly different, to the point where LendingClub's own CEO said, yeah, there are people that are doing better than us in this space, but that can't go on forever. Meaning we don't know how they're doing it. It sounded like when Coinbase's CEO came out and was like, we don't know how FTX is doing it, but they're doing great. It almost seems unexplainable to a sense of how well SoFi is doing right now.
Well, so I just going back to sort of Chris Hager's article, I think that like if SoFi can hold off on the selling of the loans for another 2 quarters, then that's
Maybe 3.
If it's 3 quarters, then that's about the same time when the Fed is going to start to cut. And so if you think about that, then like you're in the clear. If you can hold off 3 quarters, you're golden. If you can hold off 2 quarters, then even that's still pretty good.
I think the worrisome part is I think people were expecting some cuts now.
Yeah. SoFi was
So people went, oh, if SoFi can survive till now, then we're golden. Then they go 3 more quarters, and people are like, holy crap! Like, and then if there's another pivot, if inflation stays higher for longer, for some, maybe it's a black swan event, maybe it's already priced in. If it gets extended even longer, how long can SoFi live? And I'm not trying to be bearish, but that is why people are shorting this stock, is that there are concerns about lending.
Well, that gets into deeper questions around the macro as well. I mean, I don't think the United States can keep paying this interest on our debt. It's going to be trillions of dollars soon. Right now, it's in the like 800 of billions of dollars, right? So I think the Fed's cutting next year, but you're right, Tanner. If some shit happens and the Fed's not cutting next year, forget SoFi. Every bank is like in some real shit.
Yeah, it just hurts lending. Like, all right,
everybody. See you next time on SoFi Weekly.
Bye.